All right. Good morning, gentlemen. Get you unmuted there, Dave. Good morning, Asham.
Morning, everybody.
Hey, Dave. How's it going this fine Thursday for you?
I have my. I can't hear everybody again. Let me see if that works.
Okay, gotcha.
Oh, and now I hear you. Good morning, Mike. Good morning, Dan.
Good morning, Dave.
Good morning, Kevin. Sean, good morning.
Good morning on the 75th anniversary of a big day.
Yeah, D-Day. Wow, that's crazy. Awesome day.
Well, even though it was high risk, I still had to dip my toe in the water this morning and grab a quick short. Then I got out before this happened, so I was happy about that.
Yeah, I didn't do it this morning. It was too much risk for me. The position I was in, I actually got out on Tuesday after we had our trading room. Even with the micros, I was up $100, and it was about 8 or 9 o'clock at night, and I exited the position because I know that when I added up the percentage changes for that time period, it was over 0.4, I think.
From Tuesday, from that big move?
Yep.
Yep.
So right around 8, 9 o'clock that night, I exited the position, made $100 on it. With the micros, even with the micros, I mean, $100 is, I mean, that's really, really good money on a single contract.
Yeah, that's in line exactly what I did. So I used the paper count since I already had a different setting. I didn't want the numbers to skew, so I used a full contract in paper, and I put this one on, and I left on. And yeah, it was 995 right around the close.
Yeah, it was about almost exactly 1/10.
Yep. Then I've let it ride, and we see right now it's at 575 after going through yesterday's up move, obviously. So it's still up on the whole thing, but I figured I'd just let guys see how it played out.
Yeah, in the spreadsheet we had a pair of sixes today. I mean, it's just
right.
I hate those double numbers. The only thing that gave me a down bias, the down bias was on the ROC. We went from a +1 to -0.
Yeah, I was also noticing, 10 to 11 on the UD, slight ratio 535, 537. Fifth column still went up. I was like, yeah, I don't like this. Like you say, nothing was really nice, and the flat is always the worst that we never like. Same thing as double zeros.
Yeah. But if you notice the binary trend, this is something that I noticed yesterday when I was looking at the spread, is that the binary trend has been positive now for a very long time. And before that, it was negative for a very long time. And I don't know why that's happening, but it's becoming a little bit more consistent in the binary trend rather than the bell curve. You see how long that negative trend was?
That was a really long one there.
Yeah, so it looks like, I don't know, I'm gonna rely on the binary trend going forward, because it looks like there's some really long trends in those columns, and I'm just gonna track that along with the ROC. But yeah, there was another spreadsheet. It was the SLV DBC, I think, that we.
Yeah, it's funny you mentioned that, because I just updated that this morning.
Yeah.
If you guys haven't seen this yet, bam.
That has some very long binary trends in it as well. Wow, holy cow. I haven't done that in a couple of days. Yeah, that went up very, very sharply.
Yeah, look at the chart on it.
Yeah, wow.
I drew this just out of curiosity, because it was right after this happened, and I saw this. I'm like, well, that's kind of interesting how it bounced off that and had major resistance, then it rallied right through it. So yeah, I can take this up, because we used to have the channel coming down, right?
Right.
When I saw this happen, I was like, oh, that's kind of interesting. Let me draw a couple lines on there, and I came up with that. I was like, Oh yeah, curious.
Yeah, the nice thing about that spread is it does trend very well and it respects trend lines. And yeah, I mean, look at the downtrend. It hugged that downtrend line pretty well. It respects the trend lines. That's one of the reasons I like it.
Yeah, especially looking at the indicators on the deviation scaled oscillator down here, where we had the down, and we had the long down, then we had the up here.
Yeah.
Since then, we've been moving up quite a bit faster than the long down.
Yeah, that's for sure.
Huge move there compared to what this thing normally does.
Yeah, I think both silver and gold have been on a bull run here a little bit. I think gold is up pretty significantly over the last few days.
There you go. Mike says he took a long a few days ago. Very nice. I bet that's working out well for you.
Nice.
Did you take it when you saw this arrow, maybe? How many days ago did you take it?
What do you got? You got that on the daily, so yeah, that would have been what?
That was back on 5:30 on the daily.
Mm-hmm. Yeah, even if you got in at the end of the day when that fired, you would have been doing pretty well. Yeah, you got it 2 days ago. Okay.
2 days ago. Okay. Nice. The 4 hour is interesting to look at every once in a while too. I find where it does trigger some signals.
Yeah, I like the 4 hour too. Yeah, I mean, see, there's not a lot of. I mentioned this a number of times before, but Charles Bukowski he wrote the book on the Encyclopedia Chart Patterns, and for 20 years, well, for 10 years, for me, it was the Bible of chart patterns, and he wrote in 2010, though, he wrote an article in Stocks and Commodities magazine saying that those traditional chart patterns on stocks they work less than 50% of the time now. And he attributed that to high frequency trading. But see, when you get into relationships like the SLV BBC or the YMNQ or some of these other types of arbitrage opportunities between the instruments, and it's not strictly pair trading. A lot of people like to say, oh, it's pair trading. Well, it's not strictly pair trading because there's common elements in both of the instruments. So there's silver and there's silver in DVC. So there's a commonality there, but DVC has a lot of other components to it also. And so really what you're playing is you're playing the SLV strength against or weakness against the other components of the DVC. So it's more of it's not strict, maybe not a volatility, but it's a strength weakness type of play. And so now chart patterns, like down channel, you got a beautiful down channel there that was broken out of, the instruments, they respect the trend lines, and I think it's just a fascinating way to trade. And DVC and SLV are relatively inexpensive instruments to trade. Kevin says, sorry, I was short. Down $100. Channel was going down, so I went short 2 hours. Went short 2 weeks ago. Okay. So he's not long SLV DVC. He's actually short. Uh-oh. I don't know about that.
It looks like Mike's got a long and Kevin had a short, so yeah, Mike's happy and Kevin's not happy.
Yeah. Yeah, if you saw the deviation scaled oscillator there that had an up signal, that's usually fairly reliable for this combination.
Yeah, I'd say these carry more weight than the chart signals.
Yeah.
Definitely.
The scaled oscillator definitely holds more weight. I use the PPS as a confirmation on those signals. That's all it is, confirmation.
Yeah, so if you're a couple weeks ago, what do we got? Today's Thursday. So you might have been somewhere in here you might have went short, just guesstimating.
Yeah. So Kevin, if you're thinking about going long, I would wait for a little bit of a pullback because on the fifth column levels, we're starting to see a little bit of a downtick in the bars there. And we're already over, we're at 2.9 on the standard deviation on the oscillator. So 2.9 deviation is pretty high. Might want to wait for a little bit of a pullback to get in. And then you can recoup some of that $100.
Yeah, I was going to ask you too, Dave, and I know a bunch of people have been getting them. You had the adjustment on the new beta scripts. I should ask you if you have, do we any more you want to chat on the SLV DVC, and I'll switch topics a little bit.
The only adjustment on the beta, the intra-trader, there's an audible signal now. So when
I was thinking these guys. Your other two ones that you're providing to some people.
Oh, yeah. I actually made a slight modification to the YM price change down there. It's real easy. If you go into...
Yeah, we document that for the members.
Yeah.
Are you in the script itself?
Yeah, you have to go into the script.
Okay.
Real easy. The def PA, definition of the PA there.
Yep.
Take out the absolute value. Just take out abs value. And so what it'll do is it'll give you positive and negative rather than just a positive signal on that.
So I'm just highlighting and deleting?
Yep, that's it.
For those watching the video after the fact?
Yep, that's it. Hit apply, you're done. And so now what it does is it gives you, but the other thing that you didn't do, it looks like you didn't do that, is... yeah,
because you got the dots and all that other fun stuff going on.
Yeah, well, so say okay to that and then go back, and then for the settings on that, go to PA1 and draw it as a bar. I kind of like the bars. Yeah, those. Yeah, that's it. So that's the way I have it set up now. And basically what I'm looking for, and what that is, the yellow is the difference between the expected price and the Dow. So the Dow's price and the expected price. And when there's a huge deviation there, then, something's not right. When it's really, really close like it is today, then things are normal. But when there's a huge deviation, when you get a big number like we had a couple of days ago, that means that there's something wrong. That there's like it's like the price anomaly column on the spreadsheet. So when it's very, very large, it means that it could snap back the other way.
And then for the rest of the members, just to have it recorded, you also had some lines at, was it 30s?
Yeah, 20s.
On the RX?
Yep. So basically, I just drew those in, and I just drew them with the drawing tool.
Oh, okay. I wasn't sure if that was actually part of the script or not.
No, I didn't put them into the script. I just drew them on the screen with drawing tool.
Okay, perfect.
And I just put extend to the right, extend to the left, and you're done with that. But that 20 level, plus 20, minus 20, seems like a really, really good point at which it reverses. And if it goes over the 20 level like it did the other day, it really indicates something that you probably overextended on one side. It's overbought if it's above 20, and it's oversold if it's below 20. Exactly.
So we'll just throw that on there. So here's what Dave means by extending left and right on. I'm just on a price level. I colored it green. We can make it a little bit wider if you want to see it too. That's up to whoever's doing it.
Perfect. Yep.
Same thing here. I'll do another price level. Just for all the kids playing at home. You can draw this anywhere. Watch this. I'll draw it up here, totally in the wrong spot. Go into edit properties on it. And just go to the value. Make it -20. left and right on. With 2, we'll leave it at red. Bam.
Perfect. Yeah, that's typically what it goes to. So you got the oversold level, you got the overbought levels, and then it's actually if it's a negative value, that's also kind of important. And so the line is already drawn as when it's negative, it's red. When it's positive, but if it's going up and it's still in negative territory, it's a dark green. When it's going up and it's above 0, it's a light green. And that's how. So I got a 0 line in there too, if you want to put that in. It's just a yellow dotted line.
Okay. I love it when I
because it does make a difference if it's positive in positive territory or in negative territory.
Where's my price level again? Don't drop price levels very often.
And Thomas sent us an email. He had a question about how to take off.
Oh, that's right.
Session. So we'll answer that for Thomas.
Yeah, so we'll hit that next. So perfect. Thank you for reminding me of that.
Yep.
We'll go with 2. We'll keep everybody consistent. Orange looks good for 0. There we go. So yeah, interesting. So up in settings, or excuse me, yeah, settings.
Yep.
Futures tab, you were right on track there, Tom. Show extended trading hours. If you have it on, flip it back off because I'll show you the difference.
And you also want to do the start aggregation.
Yeah, if I have it like this, whoops, no more price levels, sorry. That's where you miss on some signals that we found the other day. So if you have it on and you're looking at overnight, come into futures, turn it off, uncheck it basically, and have this one checked as Dave just mentioned. Start it at the open and apply that. See that? Now we actually got 3 down arrows that we didn't have this minute ago. It's been an interesting morning, actually.
I've seen a lot of price volatility, so prices are kind of jumping all over the place. And in the market timer update last night, they're indicating that we should have it down. Because yesterday, I mean, with the Dow up 200 points, there was no hurting in the first column of the balance of power, the BOP. Both on the NASDAQ and the Dow, which is really, really unusual. And so we should see some down movement today.
Yeah, I was watching. I'll make this one a little bit smaller again. So this is the chart. I'm going to set this one to a 10-minute with the new beta ones and put those through the testing. Still watching, obviously, all the other ones that we do. And Kevin says he just emailed, so you'll be getting this intra-trader script. Watching it on the indexes, as well as the futures contract itself. And I know I'm just a kid in a candy store with these things. I took, as I mentioned early on, if anybody wasn't in first, I did take a very quick short on the ARB, and then I got out when I saw this nice extended bar. It wasn't a huge move, but I'll take a little move. Just everybody's curious about what we're doing, right? So, and then I got out and I saw this pop in, and I saw this pop in. I was like, oh, I took a little scalp. I rode this up about 15 points, maybe only 20. And I got out, then I went back down. So,
yeah, that's the way you want to do it in this market. You want to scalp because the price volatility is just too high.
Yeah, I was in and out in a minute, less than a minute. I was on that one. It's like 45 seconds. And I grabbed 20 points. So that was a nice quick $100 on one YM contract, full contract. So
yeah, the SD and SDs on the YM were both positive early this morning, and then now they turned. Looks like they're turning negative there.
Yeah, what I saw there, why I did go long, I actually took that was I saw the P curve was coming up. These dots were moving up. MT vol was going down.
Yep.
So that's, you know, people say, why'd you go long when all this stuff's going down? Well, at the time, it wasn't.
Right.
Here's what I saw at the time. I saw greens coming in, greens going up. So the signals were there for a nice quick long. And as Dave said, yeah, very fast scalp. I'm not sitting on it all day.
Absolutely.
The Sham says the price anomaly beta script, is that from you or the market timer team?
Market timer. Yeah. The only thing I didn't modify that at all. It just seemed to work very, very well. And I looked at the code and I liked it. So I didn't make any changes to it. The only thing I changed and modified was the MT volatility, which is the RX reverse. And the YM price change, which was a beta script for the price anomaly column, which is still very, very much in beta, but I like it. I like it a lot. It kept me out of the market yesterday. I really wanted to short the market yesterday, but that kept me out.
Oh, there was one that I really wanted to take too, and I got stuck out because the signals on the ribbons were in direct conflict. I'm like, don't do that to me.
Yeah.
Might have been here. I saw all these downs. I was like, oh, right. Look at this. And I'm like, oh, no, it says up here.
Yeah.
So I stayed out.
Yeah, you want everything lining up. If you don't have it lined up, then you really don't want to take the trade.
So that's a good key for everyone is don't just rely on one signal. We're not just looking at, hey, red arrow, go short. It's a combination of everything.
Yep. Yeah, the more information you got, just like a pilot flying a plane, he looks at all his instruments, not just one.
Mike says, not much success on scalping. You're holding on entries too long. Keep practicing on paper before you reel then until, because you'll get a feel for when you see them show up. And then the activity and the other entries is what I would advise at that point at least.
Yeah, and when Dan's talking about scalping, I mean, he was in and out of that position. And how long? The long this morning?
I was in at 8:40 and 54 seconds, and I was out at 8:41 and 48 seconds, so less than a minute.
Exactly. So, and I remember that bar because I was watching it closely because I was looking to take a short position. And it was like, I think the YM was up like 18, 19 points, and it jumped to 60. Went up 60. It was up 62 points.
Yeah, I didn't get any of this part of it. I think I was in here, and I was out like here. So yeah, I jumped, and I didn't get that jump, but I was fine with that.
Yep. So yeah, I'm currently short. I'm currently short the market. Just kind of see how it plays out today. I'm gonna see if we get any bit of a decline based on market timer signals yesterday on the daily.
Kevin asked if the intention of this new indicator is for use for scalping since he hasn't had a chance to see our other recent videos. Yeah,
it's basically a scalp. Yeah, you don't want to. Of course, money management is important, so you have to keep money management, but definitely a scalp. And you want to take a look at all the indicators, just like Dan indicated. So if they're all lining up, you got MT volatility going up, you got down signals, you got the ribbons going down below the green lines, then you're probably lining up for a short position, and then you want to take a scalp. And typically, what I do when I see the signal, if I do take the short position, I put my stop at the top of the bar that has the signal. So absolutely, doesn't matter where I get in, I'm going to exit, put the stop in at that bar that has the signal at the very top of that bar. And that's the most I'm willing to risk on that trade.
And Mike, the other thing that I'd add too, for if you don't want a paper trade where you think your mind doesn't work with that, that's where you use these new micros, do one contract. 1/10. So yeah, if you're wrong a little bit, you might lose $10-$50 instead of $500.
Yeah, I mean, well, let's see. I mean, on that one, I mean, that's 225.50 or so, 25.58.
Which one are you looking at?
The last down arrow. What's the top of that?
570.
And we're at 550 now. That's $10.
Yep.
That's $10 risk on the micros. 50 cents a point on the MYMs.
So thinking, each 10 points is usually $50 for a full contract. So yeah, you're 1/10 of that. So each one of these grid lines is $5 on a micro.
Right. So I mean, that's just fantastic. I mean, if you took a full YM contract, that is very, very different. That's, what would that be? That's closer to 20. What is it? 20 points? Yeah, 20 points would be $100 risk.
Right.
$10 risk. And if you happen to be right on the MYM and you think there's more potential to the downside, you can hold on to it and adjust your stop to the next top of the next bar.
You see how this is moving down? That's what he means. If this trails down, move your stop down here and you're locking in your profits.
Yeah,
that's the opposite. I shouldn't say the opposite, but yeah, that's another way to play it where you're just riding the wave.
Yeah. And also, the one thing that's really nice about NinjaTrader and TradeStation is the fact that you can do trailing stops.
How do I get the 12-hour clock on a toss chart? What do you mean by the 12-hour clock, sir?
In H12, maybe he's looking for a 12. Time period is 12 hours.
I don't know. What do you mean, Keith? Do you mean a 12-hour time bar?
I'm going to assume that's what he's saying. So basically what you can do is, go into custom there, go into your settings, and then do a custom. And just add a time frame. And I believe you can do, do custom. No, you want to do the, I guess that's.
Either would work, but I'm trying to understand what's he seeing that makes him think about it. Is it something that I see on my charters or something you're trying to make yourself?
Well, over to the right, you got 12 hours, so you can do a 12-hour.
He's probably looking at the clock in the upper left-hand window.
What clock? There's a clock there.
Go away. I got my stupid Zoom thing just got in the way. Let me cancel this for a second. Oh, more cancels. Do you mean this? This is just the main screen that you look at. I leave it on the monitor tab so I can watch positions. But this is just the main toss screen.
Yeah, I think everybody has that.
Oh, at the bottom of Dave's charts in the video, he has a normal clock, not 24-hour. Bottom of the charts down here.
Maybe if you go into your
That's just my windows.
Yeah.
So that's just my clock. That's just my computer itself. That has nothing to do with toss. Yeah, that's just my taskbar.
Yeah, he's on a Windows computer.
Yeah, Dave's on a Mac. I'm on a Windows. If this is the clock you're talking about.
Oh, that's what he's talking about. Yeah, so, on my videos, right at the top of my top right side.
Oh, yeah.
Because I'm on a Mac.
Yep.
My clock's up on the top. And
sure.
Dan's is down at the bottom.
You're confusing us there. We're like, what are you talking about?
It's like,
well, see, look at that. Oh, bam.
Wow. Yeah, nice drop there.
Pretty.
So you had SD declining, you had ST declining, you got the down signal, and
they all play perfectly together right there.
And T-vol is picking up, bright red. It's going up.
So yeah, that's what we're talking about, guys. It all went together.
Yeah.
That's exactly how we play that. I'd have taken a short, like Dave's short right now. And we'll go back to the contract. There, it's still going, so you can move your stop down here. Just keep moving that stop down.
Yeah.
Already got in, 60, so that's 10, 20, 30. Coming up to 40 points. Do the math on whichever one you're in. There you go. Practice on the micros and graduate up. Andre says, can you do trailing stops and toss?
I don't think there is trailing stops and toss. You can use the active trader.
Just use the ladder.
use the ladder, you'd have to manually
Whoops.
move.
If you're in one, you can just keep moving your stop down.
Mm.
I'm not going to put one in since this is the ARB trade that's on, but that's fine. Mike says, thoughts on a Diamonds Qs swing trade. I haven't looked at Diamonds Qs in a while. See if I still have the chart. There we go.
Oh, by the way, I am going to be doing some coding today for the VolArb. I've got a new indicator I think that's going to be pretty awesome. I don't know if any of you guys got Dr. William Ziemba's book on volatility on calendar anomalies. I started reading it, and he gave me a fantastic idea for a new indicator for vol arbitrage. It could be pretty awesome.
Oh no, you're going to kill me. I'm already overloaded.
Teasing you. Yes, I'm teasing you again. But it is going. I think it's. I don't know. I'm pretty excited about it. They gave me some pretty good ideas in the book on how to identify precise entry and exit points. By the way, if you haven't heard that chat with traders, again, that is just a fantastic interview. Now, a lot of people complain because he kind of went all over the place. He was really kind of, he talked about a lot of different stuff. But if you pay attention, there is some real meat in that interview. And then, so after I did that, I got his book. And the book is fantastic. So if you haven't seen that chat, if you haven't listened to that chat with traders, it's an audio, it's not a video.
Yeah, which book were you talking? I think he's got a couple of them.
The calendar anomalies.
Just so we can document it in here for people.
Yep, the calendar anomalies. That's the one where he talks about specifically about the different instruments. He actually has studied the S&P 500 to the value line. Now the value line is not around anymore. So when he did the book, but the value line was mostly low cap stocks, US based. So he substituted in the interview for the Russell 2000, which is a good substitute for the value line. So if you do get the book and you start reading it, substitute value line for Russell 2000. Or I'm sorry, Russell 2000 for the value line in the book.
So there you go. If you're an e-person, it's $25. If you're old school like me, get the paperback or the hardcover if you're a collector.
Yeah, I just got the paperback. I didn't care. I don't care if it's a hardcover. I just wanted the info. But when did he write that? What was the date on that? It's like 2000.
Let's see.
You should have the date right in there. And keep scrolling down. Oh, that's weird. I can't remember the date now. But yeah, so he talks a lot about the value line in there. But Russell 2000 is a good, perfect substitute, actually. And he talks about typically the December to January effect, but he did studies for many, many years, and he has some incredible insights into that anomaly, which is exactly what we're doing, basically, with the YMNQ. But we're doing it on a daily basis.
Kevin says, are you legging in and out of trades with the new micros? Absolutely not. At least not me. We've always talked about you don't know which side is going to be your winner. So if you think you're going to get tricky, you go for it. I've never seen it work for anybody long term, even with the new micros. I wouldn't try it.
Is he talking about the spreads though, or is he?
Yeah, I think he's talking about just doing VA. Legging in and out.
No, just
because that's the key to that whole strategy is we don't care which one's the winner or loser. We just know that the spread is the way it works. Not the VA. Which ones do you like in and out of then, Kevin? Sorry. What trade are you liking in and out of?
So I think he's just talking about straight long or short positions on.
Well, YM and NQ, are you talking single? Like if you're short or long the YM?
Yeah, I think that. Yeah.
Are you talking about scaling in and out? Like adding on?
Yeah, I think that's what he's talking about. If you do that,
yes. So he's talking about scaling in and scaling out.
Yeah, so that's the way I would do it. That's the way most professional traders do it on straight trades, either long or short YM and NQs. But your signals, now remember, if you're doing that, if you're taking a longer term type of swing trade on either the YM or MYN, either the micros or the regular contracts, the signal for getting in has to be just as strong on the add-on as it was on the initial position. So you're basically, if you're using the intratrader script, you're basically waiting for, you had one short fire, then you had a second one, that would be a good time to add on, and then the third one you could add on again, but I would not add on again until you had that fire of the signal. And then when you're scaling out, you have to use good money management. Typically, a nice long bar with an extension, a good extended bar like that one is the time where you want to exit the position. Now, if you're doing a swing trade, it's a different story. I wouldn't add more than one position a day because if you're going to do a swing trade for 2 or 3 days, you want to look at the end of day data, and then kind of make a determination if you should continue to be short or add to the position the next day. If you're doing very short term, like this one, then you want to wait for those signals. And the second signal has to be just as good as the first one. So just like Dan said, if everything still adds up and you have, if you're in a short position and you have the empty vol rising and you have everything else lining up, then yeah, you can add to the position, absolutely.
See that? It was drawing the red arrow on the rally again.
Mm-hmm.
As it's coming up into it, that's interesting because we see right there. Broken up hurting though on the bearish side. That's kind of interesting. It's not very well formed there. It was almost a trap. It actually kind of was a trap. It didn't perfectly line up, but that did happen yesterday. I should show you guys that in case anybody didn't see that. It was in the morning.
Oh yeah.
A little intraday bear trap.
Yeah.
Where this appeared.
And that's on a 5-minute chart.
That bounced, boom.
Wow. Yeah, that was on a 5-minute chart too. It's kind of rare, 5 minute.
Yeah, I don't think I've seen it before on a 5 that I remember before.
Yeah.
Remind me, please, how do we get these signals on the SD chart? These signals? Or these?
That's a different script. The upper script is the new intratrader script. Andre, it's not the SDs and STs firing off that signal. It's a new intratrader script. If you send a support email to Strong Market and ask for the intratrader script, it's in beta. It's not the downloads, but they'll send it to you. Kevin says, I used to use 2 contracts at the entry, then once I got a certain level of profit, I would close out one and let the other one ride until I got a signal to get out. Okay.
That's a common one too. And also I've heard, if anybody's made it through the end of trading in the zone, not to be a spoiler for you, but one of the things they talk about is entering with 3 contracts, then you scale out. So that's a very common one. So if you'd see an entry here, if you went short 3, you could, take profit off here, take profit off on a scalp time. That's very quick. That's within 10 minutes. But yeah, that's very common, Kevin.
Mm-hmm.
So sorry to judge or misname your terminology. Legging in and legging out is always stuff I've heard too. You know, people with iron condors, and just when you're doing multiple legs of a strategy, that you do one to try to capture more profit. So that's why I thought you were talking legging in and out of the VA, where you might go long the NQ, then wait to go short the YM, which is one thing you never want to do in the VA. So there you go.
Right.
I can talk faster than you can type. You got it. Am I trading the arbitrage here or straight YM? This is just straight YM when I'm doing scalping. I'm only one, so I'm short. Or actually, this morning I was long the YM. I took it for 15 ticks, and I exited. So no arbitrage, just straight up long on the YM contracts. In and out. $9:42. Any cool questions before we get to the top of the hour? Another awesome session, so I appreciate you guys being with us again. See how that VA trade's doing. A lot of sideways action.
Yeah, Andre, I would definitely use this. Well, see, you have two options because of the VA trade. It depends on what contract you're using, but yeah, when there's high risk on the VA trade, I definitely would use the intratrader for scalping. Absolutely.
And one thing I'll do as well is, if I'm in a VA trade in the morning, I'm not scalping at the same time. It's too much to watch. Once I close if I'm in a trade for the arbitrage that day, I won't scalp until after. Plus, it's nice to have all three of these lines and these draw in after a half an hour. So I'm usually not scalping on the first couple bars. This was a rare one where I actually was in before the 30-minute bar drew, just because I knew I was running the trading room and I wanted to get a little bit more, and I saw a good opportunity, so I took it quick. But then, yeah, also, I think Dave just mentioned it too, but the micros is really opened the door for this, so you don't have to do things with full contracts. And yes, I'm using auto sends. It's a little bit different on Interactive Broker, so whatever they call it, I think they call it rapid transit. But whatever your broker does so you can get as close to one-click trading as possible. On your YM chart, you were showing 4 down arrows on the intradater script. I'm only showing 2. Check and see if you're looking at overnight schedules or overnight, what we talked about earlier. Make sure that's turned off. And
make sure you're on the 5-minute chart too.
Yep, 5-minute chart. Kevin says, are you using ratio numbers from the spreadsheet on your 1 and 5-minute micro charts in the VA trade? I'm not yet, because I haven't done the other ones. I've been strictly YMNQ only. I haven't done any RTY or M2K trading yet.
Yeah, if you're doing the RTY, it's 3 to 5, I believe. But if you're doing just the YMNQ, it's 1 to 1. It's still 1 to 1.
Yeah, Gary, if you're on the 5-minute, you believe you got it turned off, so you should know, like if you're looking at the chart, you'll see if there's overnight session or not. Like if it goes directly from, look at the clock down here with the arrow where it's, for me, I'm Central Time, so it's 8:30 open, 1500 close. That should jump in time, so you'll know if you got overnight shown or not. Oh, Kevin says, in the MYM and MQN charts. Are you using ratio numbers? Ratio numbers for that, do you mean, Kevin? So a different ratio in the chart. Well, we would definitely do a different ratio if I was drawing. This ratio is still the same. I guess I'm confused. Maybe I'm missing another question here. Yeah, so this ratio, yeah. So from the spreadsheet, is that what you're talking about? The price ratio? Yeah. This is all just NQYM charts. The price ratio, yep. So I do that every day. I'll plug in whatever the latest one is. SLDBC. I'm like, why is that so far off? That's why I was looking at the wrong spreadsheet. So yeah, I'm still plugging in the latest one. Absolutely. So if you start doing the RTY, yeah, you want to plug that ratio in. So if you're doing this guy, you're going to have 16,950. it's the exact same thing. It's just 1/10. So there won't be different numbers for MYM versus YM. It's just 1/10 the cost. So it wouldn't be a different chart. Does that make sense, Kevin? Then we'll come back to you, Sham. I see you. So yeah, MYM is no different than YM as far as the chart. Just like MNQ is no different than NQ on the charts. You've noticed price action to be different on the micros. That's interesting. I guess I haven't day traded. I haven't watched the MYM chart. So if you're seeing differences, maybe I'll take a look at that, but I have not seen that personally. Dave, have you seen that at all, or have you looked at that?
No, not at all. It looks like they're lining up almost perfectly. I'm watching it now. They're slightly different.
Yeah, he says very slight with some gap up and downs apparently.
Yeah. Maybe a liquidity issue, but I think in the end they're probably going to even out. But
yeah, it probably is exactly that. He's saying it's getting better over time, so it probably was just liquidity coming into it.
Yeah. If you're trading the MYM and you're scalping, you want to use the MYM chart and not, definitely for your buying and exits.
Sham says the TSA alerts are now going to be published in the members area. Can you advise more on that? So anybody that is a TSA alert member, this is the last week that they will be going out via text messages. So tomorrow will be the last day via text. It will be in the link that the TSA members have been provided on the member site. It's not something that's actually just shown. Since it is only for TSA's current subscribers, we sent it out to them and they know where to get that. And it's just basically because of the lack of stability in the system that we were using, where we were missing out too many trades, and it's very time sensitive. And if their SLAs were, say, if it goes out within a couple hours, that's what they advised to, and that wasn't good enough for us. So we're not going to continue to use them because we don't want our members not to be getting the signals, since it is time sensitive for the opens.
Yeah, some people were getting delayed. Sometimes the alert was sent, but it was on our end, but it was never sent out through the system.
Take it easy, Gary. Thanks. So, Andre, if you haven't got it and you're a subscriber, you will get it. Just shoot support@Tradingology an email. That goes for anybody else watching the recordings. If you are a TSA subscriber and you haven't got the link yet, send support an email and we'll get it to you.
You're welcome, Kevin.
Appreciate it, man. You're welcome, Andre.
Take care, Anya. Have a good day.
Have a good day, Nurag. We're getting these guys trained on time. They're dropping out before we have to worry about the hour. It's perfect.
Yeah.
Kevin, I'm glad to hear that. That's what we're here for. The more I can help you guys do this, the better I feel. This is fantastic. That's why Dave's telling me he's got more indicators coming. I'm already a kid in the candy store bounced off the walls over here.
Yeah, I think this new indicator, based off of the data that Dr. Ziemba included in his book, is going to be helpful for the VA trade entry and exits.
I just had this gut feeling that it was going to be less active day to day, around zero. We're only 47 up on the YMs now and 5 up on the NQs. It's funny how you get gut feelings and they sometimes happen.
Well, if you watch the charts enough, you really get a feel for them.
I think that might be part of my success with these new indicators and putting everything together too, because I've done it long enough.
Yep.
You definitely get a feel for, oh yeah, this is what's going to happen. Kevin says he was getting beat up pretty bad in the VA trades, so he stopped it for 2 weeks. Glad to be back. New indicators. Yeah, it's nice. Sometimes you just need to take a break, Kevin, and walk away. I've seen that as well in the past that I've done. It's like, yeah, if you take a couple losses, then recoup and just get away and come back and review what you've done. Sometimes just a breather is all you need.
Absolutely.
Keith says I came on late. What is the VA trade? The VA trade just in general, you mean, Keith? Volatility arbitrage?
I think he's talking about today's trade, maybe just today's trade. So today was no trade. Had a down bias slightly because of the H4 and the M1, but yeah, there was no bias today. We had flat +6 on the last 2 days of the spreadsheet. So there's no bias today whatsoever.
Yeah, it's definitely been riskier, Andre. That's for sure. We haven't had our 1 or 2 in a while.
Yeah, take a look at the binary trend, though. I'm kind of following that because the binary trend seems to be lasting much longer for some reason. The bell curve intermediate term peaks continue to be either negative or positive. We've had like 3 peaks in a row on the positive side, but the binary trend has remained positive. And the previous trend was all negative, and we had a couple of intermediate term peaks on the negative side of the bell curve too. So I'm going to be focusing on the binary trend, really to kind of give us an indication. I'm not sure why that's happening, unless it's like we've talked before about the allocation of money managers to either technology or industrial stocks. And if that's the case, then the trends may end up being longer, not on the bell curve, but on the binary trend side. So,
did you hear what they just said yesterday about interest rates?
Yeah, they want to lower them.
Yeah, they might drop them this year now.
How crazy is that? I mean, last year they said they were going to have 5 rate increases this year.
Yeah.
What is it in the economy that they are concerned about? Because typically they're going to raise rates when they see everything as,
happy, good. Yeah.
And now they're talking about lowering interest rates. I think they're seeing something in the economy, obviously, that they don't like.
Right. I was like, are you trying to get ahead of a recession and lower them in front of it?
Yeah. Well, I mean, look, this bull run since 2008, you're talking about 11 years, right? Or 2009. So it's 10 years. Bottom was in March 2009. We're gone 9 years into the bull run. The average is 6 or 7 years. We're way over now. The QE obviously has extended the economic recovery, but it's really based on historically low interest rates. And now, I think that they knew that the economy was in trouble 2 years ago when they started raising rates, but they knew they had a couple of years to work with.
They had to get somewhere, yeah.
Yeah, so they did not want to go with negative rates, so they had to raise rates a few times in order to be able to
build in a cushion.
Yeah, to give them a little cushion to lower them, because otherwise, if they didn't raise rates over the last 2 years, they would have had to lower them into negative territory, basically. We'd be like, we've got negative interest rates now. I think Japan has negative interest rates, or a couple of European countries have negative interest rates. So, I think they built in a little cushion for themselves. Mike says he's long TBT, expecting interest increase eventually. See, that's not a bad trade. I'm not saying anything. I think that's probably a pretty decent trade because the Federal Reserve can influence the short-term rates, right? 3-month short-term rates, and so they can lower rates if they want to. But if the long end of the long end of the rates goes higher, the 30-year goes higher, they're not going to have any choice except to raise rates, because otherwise there's a huge arbitrage opportunity there that people are going to take advantage of. They're going to borrow money, they're going to borrow money from the short-term rates, and they're going to go out and sell the longer-term rates. And I haven't looked at the yield curve lately, but I'm not sure if it's like continuing to be flat or not. It was really flat not too long ago. Yield curve is up now?
He was saying that up before. That's different.
Oh, okay. I'm going to take a quick look before we finish up today. I'm going to take a look at the long-term rates.
Just for those playing at home, that last trade just for educational purposes only that we took short. Dave closed the profits because it was such a great day. I would have definitely closed it before the open that morning because it was over $1,000 up around this point. But we see this hovering at 650 right now. I'll probably close that one out just because it's actually there for showing overtime anyway, so we're good to go there.
Yeah, well, I think, okay, so the 3-month is at 2.35%. Closed yesterday at 2.35%. The 10-year is at 2.12. So they're already inverted. That's why they that's why they have to lower the 3-month. I think they're trying to avoid that inverted curve. The 30-year is at 2.63, so it's still, it's up by, but it's not by much. Not by much at all.
I forgot about the diamonds Qs. Who asked that?
I would definitely keep an eye on the 10-year. The 10-year alone hit a high. Let's see if I can find it. It looks like 2.79 on January 18th. Yep, 2.79. And we're currently at 2.12, so it's come down quite a bit. It hit 2.07 on June 3rd, so it's up a little bit from June 3rd. Yeah, keep an eye on the 10-year though. That's pretty much the benchmark for the rest of the rates. It gives you a good indication if rates are going higher or lower based on that. But I haven't done anything with treasuries in quite a while. I've been kind of watching interest rates. I agree with you. I think they probably are going to go higher. Mike, I think they will start to, they kind of backed off a little bit. They got close to 3% on the 10-year. And that actually caused some problems, I think, in the markets when it got over 3% on the 30, if I recall. But yeah, I think so. I think they're going to go up too.
Maybe that's why they're tricking everybody and telling everybody they're going to lower them.
Well,
but they can't do stuff like that, right? It's the Federal Reserve. It's monetary policy, right?
Yeah, I mean they can affect the short-term rate, so their interbank lending rate is the short-term rate, and they can do whatever they want with that. But right now, between the 10 and the 3-month, I mean the 3-month is higher than the 10-year rate. So, it's at 2.35% now. So what do you do? I mean,
Mike says he got in at 34, so at a loss currently on the TBT, I'm assuming.
Hmm.
And we had one last question. I forget who it was. I didn't see it in the scroll. We're talking diamonds Qs. I don't think there's maybe a short coming up looking at the daily chart. Similar to what we're looking at for YMNQ, right? So it might be setting up for a potential short side. I'm not doing any options trading on the diamonds and Qs anymore. I don't do any more ratios 3-to-1s. I just do everything in futures contracts, especially now that we have the micros. But I forget someone did ask, so I wanted to pull it up real quick before we signed off for the day.
Yeah, actually, that's a good point. I think with the micros now, you don't really need to do options. I wonder if options as volume has declined somewhat now that the MYMs are up. Micros, but it'd be interesting. But yeah, there's no real reason to do options with the spread, paying that the spreads on the options and the limited time, because you can roll over futures contracts, but you can't. I mean, you can roll over option contracts, but you're talking a much more expensive proposition. And then you've got all the Greeks to worry about. You've got volatility and everything else, but that's already built into the futures contracts.
I'm just happy for not fighting the spread anymore to get in and out of positions.
Yeah, I know. Yeah, that's one thing that always bothered me about options was splitting that difference in the spread. Very tough to do. Very tough to do. And usually you only got the split after the market moves against you.
Exactly.
Then you're down $50, in like no time, in a second, because of the spread. Even on just one or two contracts.
I'll never forget the first video I think I saw of you eons ago was, well, yeah, I just got in the position because I'm down. You're always going to be down. You can't be positive or else everybody would do it immediately and then we'd all be rich. I'm like, yeah, that's a funny thing to say.
Yeah, I know. It's true, though. It's exactly the way it goes.
Yeah, if you could enter a position and be immediately profitable, wouldn't that be fun?
Yeah. That's the way, yeah, it's just amazing. I mean, you're taking risk when you trade the markets, and so that you assume that risk, and you know what? For a long, long time, I was on a terrible losing streak. I had a great winning streak. I mean, it was just, man, I was making money hand over fist. And then almost like the odds in a casino, you know that if you have a really long winning streak, you're going to hit a loser.
Nothing goes forever, right?
Yeah. So it's like, okay, I was interpreting the market perfectly. And so I was on a really nice winning streak. And then all of a sudden I had a losing day. And I said, oh, crap. Okay, this is just one day. And all of a sudden, everything that I tried to interpret in the market was wrong for like a week. And I'm like, what the hell? And I think it has to do with the market changes. The personality of the market changes. Like right now, I think we're in a very weird kind of market personality. It really should be going down, but it's like going higher all the time.
Right.
For the last couple of days, it should have been going down, but it's going higher. And so it's the personality of the market. And when it changes and you don't adjust your trading style to the market, then you're going to have, these streaks of losing positions. Very interesting dynamic.
For sure.
And no matter what kind of indicator that you have, if you don't follow the market, if you don't understand the personality of the market and the way prices are changing based on a given scenario or a day that you're trading, and it goes against you, you have to get out. I mean, you can't, or take a break, or look at the market in a different way. You really need to change your circumstances in order to trade successfully. It's like there was this book. I saw this book on Amazon, and maybe you could look it up. I'm pretty sure it's still there. But this guy, during the bull run of it was during the tech bull run. So it's like 1995 and 1999. The market was just going up like crazy. And he was day trading it, and he lost money. And even though he was taking long positions the entire time. And the reason he lost money was because he never played the overnight position. And he said the overnight position generated about 30 to 50% of the profits during that bull run.
Wow.
Yeah. And so if you try to trade during the day, even if you took a long position, you probably end up either not making money or having a loser. So one of the reasons why I'm so excited now, like I mentioned last week and Tuesday and last week, was the micro contracts are really the best thing that's happened to retail traders in 20 years, because now you can hold a single MYM position overnight or an MNQ without really getting killed on, without having a tremendous amount of risk. And so now you can play those overnight sessions. Anyway, that's my rant for the day.
Absolutely. Glad to help, Mike. Appreciate hearing that. Appreciate you guys, and everybody have a fantastic weekend. We'll be back next Tuesday.
You too, guys. Ishan, take care. Keith, bye. Mike, have a great one. And Ishan or Andre, don't forget to email support at Strong Market so that they can send you that intra-trade script with these signals. See you guys. Have a good one.
Take care.
Have a great weekend, and we'll see you next Tuesday.